Hey, what's going on, guys? Neil here, bringing you a brand new video. Today, I just wanted to talk about some simple stock market analysis and where I see the markets moving in the coming months and the coming year. Just want to talk about some of my plans for 2019 and what we could see moving forward. So, I just want to start by showing you guys my Instagram. Obviously, I haven't been posting too much content on it right now. I definitely want that to change. I want you guys to be able to come to my page and it to be able to motivate you and see my journey. So I'm definitely going to be documenting my journey, and Instagram is going to be one of my main platforms to do that. 2019 is the year for me to start uploading, start posting, start grinding as much as I can. So definitely give me a follow on that Instagram if you can. I'd really appreciate it. And definitely send me a DM if you want to contact me, connect and talk about the markets or whatever it might be. So I want to talk about the current stage of the stock market right now. So if we look at some articles that I have pulled up here, this one's from Bloomberg, so a very reliable source. It says, dip buyers beware, the S&P bottoming process can take time. So if we look here at a chart, it shows that December low S&P's 500 latest route ranks as the fourth shortest since 1950. So basically, even if the market is close to bottoms in terms of equity prices, it just seems it's a bit too close to call right now. There's a lot of uncertainty with the U.S.-China. Hopefully those tariffs will get rescinded and taken away. But, we're average a decline of 20%, which started in October, and the corrections have typically lingered for much longer, 8 months. So basically what they're trying to say here is, no one can really predict the market. No hedge fund, no analyst, no trader right now really knows exactly where the market's going. But the best you can do is prepare yourself. And it just seems like it needs a little more time to settle before I'm convinced and going long in a lot of these big ETFs. I'll definitely show you guys what I'm going to be looking at to go long in once I find out that the market has bottomed. There's really no way to see that the market's bottomed, like I said, but you want to put yourself in the right place to be in the market when the market comes back to where it is right now. This could be a pretty prolonged bear market, so I'm waiting for some definitive evidence. Not only they're showing some technicals here, but I'm also, want to talk about, some fundamentals. So another fundamental I want to talk about is how Apple's, talked about their revenues are down because they're struggling to sell phones in China, and I think that's really interesting time right now. Is China leading to a slowdown in the rest of the world? It's not only the U.S. markets that are taking a hit right now. Basically every market, all international markets are taking a hit right now. So it's definitely something to keep an eye on. And, although Apple said, people are spending less, the job report was positive, and that's what kind of caused a big swing. And it's definitely been a crazy ride. There've been an average of 600-point swings every day. So there's a lot of money to be made if you're going to be swing trading, if you can get on the right direction. It's definitely something to be cautious of in going long, though. So let's go ahead and move on to the charts here. I just have the S&P 500 pulled up on a 4-hour time frame with the RSI and EMA. Check out some of my old videos if you want to learn about RSI and EMA. But anyways, I'm on a 4-hour time frame, so I'm zoomed out, all the way back to, 2014 even. And we can see, we've really come a long way since then. Since 2016, we had a big run up here. And I drew this line right here, down here at 2300. That is definitely going to be what I'm going to be watching for if the markets come back down. And then we have some pretty big resistance here around the 2550, which is what we're sitting at right now, and then around the 2600 level. So it'd definitely be interesting to see if we can get back above those levels. The RSI is, fairly high at 65 right now, so I wouldn't really consider it a buy signal at this point, but we are above the EMA. Things are starting to look better in these markets right now. Some of the ETFs that I'm going to keep on watch are going to be SPY and QQQ, of course, and maybe some of the leveraged ETFs as well if you're looking to get in and out a little bit quicker, but those can be a lot more risky. So definitely be careful with that. But like I said, I'm looking for these levels right here to either come back to 2300 or break above 2600, and then we could say maybe see some more stability. At this point, it's really hard to say. I think Apple's earnings are in a month, about a month, maybe less than a month. So it's going to be interesting to see, they're predicting their EPS, their earnings per share, to actually be the highest it's ever been, despite that they're, predicting that their revenues are going to go down. So it may not be a bad thing. I